Please welcome to the stage Cheng Wang from Akash Network as our moderator. Please give him a round of applause. Thank you, kind sir. Next up, please welcome Maja Vujinovic from the O Group. Give her a round of applause. Next up, please welcome Conor Moore from Permian Labs. And please welcome Mark Palmer from the Benchmark Company.
Testing. Thank you everyone for coming. Hopefully you're not sweat through your clothes yet. Luckily we have unlimited swag, so if you do, opportunity to change into them. I'm Cheng, COO, CFO for Overclock Labs, obviously the creator and current largest core contributor to Akash Network. And one of the things I would like to say and set the record straight before we start with our illustrious panel minus Christian, shame on him for not being able to come because for the live stream, is that a lot of people say, when did we, Akash Network, pivot to GPU, pivot to AI? Set the record straight, we never pivoted. This is part of our core thesis in our white paper stated in 2018 since the beginning of time. And this is simply a realization come true, and we're glad it plotted out this way. So shout out to Greg and the team for bringing us here. Now, lay the stage one more time. A lot of these panels, often there's a lot of interesting things, hypothetical, theoretical. We're gonna come down to earth a little bit here and try to focus on key takeaways, things that'll help guide decision making for all of us and just, I guess, all of us as operators, investors, as well as builders, right? So first, we have Maja. Maja's been an absolute stalwart in the space, technology leader for the past 2 decades. Sorry if I'm dating a little bit here. And I'd have to say a lot of the emergent tech and position of blockchain specifically wouldn't be where it is today without Maja. Conor is one of the new class of founders, I think, that is really taking advantage of the tokenization brought forth by DeFi, as well as kind of AI infrastructure coming to bear, bringing those two things together. So synthesized finance around AI. I'm bastardizing it a little bit, please correct me. And Mark here, senior equity research analyst, and he bridges the gap between those who want to know information and apply rigor towards that information and surface it in a way that is consumable, right? So if you want rigor and you want to cut through the fluff, Mark's your guy. You guys want to do any intros or anything like that? Yeah. Yeah, let's do a 5-second intro, go down the line.
Yeah, cool, thanks. It's great to be here, and thank you very much for inviting me, Greg, and the team. I think as was mentioned, I've been in a space since 2010. In Bitcoin, 2013, I acquired the first bank for Tether. Prior to that, I was in mobile payments in Africa and LATAM and energy development, which is very relevant to what Akash is doing. And kudos to you for that presentation, Greg. Really amazing and amazing work you're doing. So I wish Akash all the best. I'm an investor, run my own prop capital. I'm an LP in a bunch of different known funds in the space, also a builder. And I was a former CIO at GE, which is also why this conversation is very relevant. I ran all their cyber and machine learning early days on industrials, and actually positioned and pitched that we use a lot of energy that G would have in order to develop the mine Bitcoin and then for AI as well, and got shut out of the rooms a number of times the early days. So glad to be here and share a lot of real insights, as you call them, and real projects and where we are in that timeline.
Yeah, so I'm Conor. I'm the co-founder of Permian Labs. We're building a synthetic dollar product that's backed by loans against GPUs and some other energy infrastructure assets. Before this, I worked in private equity and in investment banking. And basically, the product that we're building looks most similar to like ABS, asset-backed securitizations, but completely on crypto rails. So taking advantage of kind of the composability of DeFi to proliferate high yields back to DeFi users that are backed by actual assets that make actual money and are not just speculative flywheels. So hopefully we will introduce, more permanent kind of debt-like products to crypto that can actually expand permanent capital on chain.
Yeah, I'm Mark Palmer. I'm an equity research analyst with the Benchmark Company, which is an investment bank. My focus is on fintech and digital assets. Actually have been covering the digital asset space since 2020. So we've seen quite a few ups and downs just within that time frame. In addition to covering stocks, I also write about private blockchain entities, protocols, projects, which is how I found Akash and wrote about Akash a couple of months ago. Since then, the evolution of the platform has been remarkable, including just what we've heard today, which I think is indicative of the pace at which change is happening in this space. I've been in this business now for 27 years, and this is a pace of change and of adoption like we've never seen before. What's interesting is to see institutional investors trying to keep up with all of that. They've been trying to keep up with what's going on in the digital asset space. Then AI comes along, and they're trying to get their heads around that. Of course, Akash is at the intersection of both of those, which is why the piece that I wrote resonated with a lot of folks. So that's why I'm here today, and it's been a lot of fun to watch the progress.
Thank you all. And I would like to lead the panel off with a question, just given exactly what you said. The pace of change is absolutely startling. And for me, it's hard to keep up while being on the bleeding edge as part of the Akash Network team. I'm sure this belief is held by more than just myself and institutions. So what would you say over the last 12, 18 months has really changed the paradigm of how we look at companies, specifically, flavored with the lens of AI? What has fundamentally shifted in the last 12 to 18 months?
Sure. Well, I think what Greg was talking about today during his keynote is very much consistent with what has emerged, which is an understanding that one of the biggest challenges that we're going to see is how do you come up with enough energy to power this amazing technology? And so if you look at my coverage, I cover a number of the Bitcoin mining stocks. And 18 months ago, these companies were focused on mining Bitcoin, as the name would suggest. Flash forward to today, and a lot of them are no longer focused on Bitcoin mining. It's part of what they do. But they are focused on developing data centers, energy writ large, for powering AI. And what's interesting is that if you talk to the investor relations folks at the companies, they will tell you that of all the questions they're receiving from institutional investors, virtually none of them over the last number of months have been about Bitcoin. It's all about AI. So we've seen in this case, an entire industry vertical that's been changed over just in a matter of months. And what I expect, and we've already kind of seen, with Hut 8 spinning off American Bitcoin, is that a lot of these firms are going to spin off their Bitcoin operations and focus on energy going forward.
I think I can't help but system think. Sometimes the answer is as obvious, right? It's also proliferation of information. 10, 12, 13 years ago, let's say 15 years ago, 15 to 17 years ago, we didn't even have a mobile text, right? And so it was really hard to understand what you need in a total either stack or a cycle of a project to really look at the long-term progress. And here's what I mean by that. We build companies, think of any large company, any industrial, they've built for producing a thing. So, a pipe, a roof, an airline engine, right? A healthcare machine. But it was never a complete cycle of a thing, meaning from kind of owning the mine where, let's say, a particular asset comes from, a commodity, to then building that asset. Today, we have to think about that. And I think with that proliferation of information, since I've been working in mobile payments in Africa and LATAM since 2007. And so that was also not a hot topic. I know my father got upset when I left law school to be doing that. So I think I just realized that we are going to be in mobile payments era, that we're going to be interacting on mobile payments. I didn't know how that looked like. And so today, our information flies way faster, 20, 30, 40 times faster than it did 15 years ago. So I think people around the world are realizing, one, there's a rising debt everywhere. Two, the access to wealth is not equal, right? You might have known that through books and education, but now it's in your face constantly. And so the questions that people are asking, and I'll go back, Mark, same to Greg's presentation, because I think Greg's presentation really hammers the point, which is we've got to think about the whole goddamn thing, right? We can't just think one thing at a time, because the same way the companies would produce, they had all the excess electricity. You can produce all the assets you want, but you had all this excess of electricity, which I was forcing GE at the time to think about Uberization of these assets. How do I then use the excess electricity on everything we produce and then use it for AI, right? But they weren't forced to think about it until now, right? And I think particularly after DeepSeek came out, and it showed us, I think, that we can do things 10 times cheaper. And so I think there is this a bit of where we are and the power of the information, that everybody around the world is able to educate themselves much faster. And I think with AI now, that's, as we discussed, that's going to be even faster in the next 5 years. And I think it's as short as 5 years, right? Where I think it's going to take over our lives completely.
Yeah, I think one of the interesting things in the US is that we're getting close to the power grid starting to get tapped on all of this new demand. And then, now people are seriously looking at nuclear, when for the last 50 years, nobody really wanted to deal with that. And now that's all moving, but that's still a slow moving beast. And so, there's a big incentive to solve decentralized training, because if you could do decentralized training, then you wouldn't need such massive power sources and massive data centers. And most people, I think that's a very, very hard, maybe impossible problem to solve, but the incentive is so great that I wouldn't be surprised if there's lots of people and money thrown at trying to solve decentralized training. And I know there's already a plethora of crypto projects that are trying to do stuff around that. The other thing that in the last kind of 18 months has changed or progressed is the validity of the AI industry and the economics around it. And just for our position being in the debt side of things, one of the big questions has been what's the depreciation of these machines going to look like? And now you have B200s coming out, and you have a secondary market for H100s, so you can start to see that. But then you also think about, okay, besides training, which really should be like a input cost, your economics as a company that runs LLM, trains an LLM, your economics on your inference should make a lot more money than training, because that's your whole business model. You're training and then you're selling inference to end customers. And that wasn't really super obvious, but when you had the video and image kind of like 0 to 1 maybe moments in the last 18 months, now we're starting to maybe better visualize why those unit economics could be phenomenal, right? If you're able to do, really, really convincing video creation, and that's the way that everyone consumes content now. And now you can kind of visualize why these businesses might really be worth $50 billion, $100 billion, is because that is the cash flow machine, right? And it's like if you think about Twitter, Facebook, right? For the longest time, people would say, oh, how do they make money? It doesn't make any sense. And then, in hindsight, it's like, oh, of course, they sell ads. That makes sense. But it took a long time. It seems like in AI, maybe because of those previous examples, we could forecast that a lot more quickly and more easily. And ultimately then, on the kind of financing part of this, you can have a lot more confidence that what you're financing will, pay off and be creditworthy. And ultimately, if you can have stability at that level, then that just increases the flywheel and makes the whole machine go a lot faster. So two takeaways I've noticed in the last couple of years, I guess.
Well said. Just to kind of weave together the through lines a little bit, from Bitcoin focus to AI focus, from the proliferation, the deluge of information that's available to us now, to kind of the fundamental, what is the fundamental economic unit that drives valuation, weaving all of those things together. This might be a little bit of a spicy topic, but I like asking spicy things since spice must flow, and we are here at Akash Accelerate. What do you think is let's just say one often over-indexed or overrated signal that you guys have come across when it comes to projects or even founders?
I get two things. Serial entrepreneur sold his companies, 2-3 times, and this project must succeed. That's like one of the things I see all the time. It's just not the case. There was a window of time that was the case. Now, with the speed of technology and the speed of access to capital and your access to distribution is what gives you an edge, right? Not even capital anymore. If you don't have distribution, or if you don't have access to GPUs or whatever you're doing, right? So I think one thing I see all the time is that people put too much emphasis in, he was a Y Combinator, he's backed by A16Z. I don't care, right? Like, what are you actually solving? I really don't care. That doesn't impress. I've found people who are in Africa who's some of the probably smartest people that I've seen in this space, and they're not backed by anybody famous, but they're racking up millions a month, right, on remittances or stable coins or whatever, right? So I think that's one thing. I'm gonna think of others. I'll let my...
I would say for crypto in particular, it's just focusing on supply side economics as like the KPIs. So like AI 16Z, people were focusing on the number of stars that their GitHub had. That's a little silly, like that doesn't pay the bills, right? Every DePIN project struggles with this. People will focus on, scaling the supply side without realizing that that's the easy part, and the hard part is getting demand. And it's no fault of the project that you have to do both sides, but I think in crypto, there seems to be this tremendous focus on one KPI that is up and to the right that I can sell hard, and it's almost always the easy one that's up and to the right, And the answer is because it's just hard to build things, and it's probably that the KPIs that really matter are going to take a year, 2 years, 3 years before they really show. So that would be mine.
I'm going to answer it from a slightly different angle. Instead of what is over-indexed, I'll talk about what's under-indexed. At the risk of, being the hammer that everything it sees is a nail, I would say it's financing. And what I mean by that is that there seems to be a broad perception that blockchain, crypto, digital assets is in vogue, and so hence, there must be a tremendous amount of financing that's out there chasing that space. What we have learned more recently, when you see companies, and I mentioned Hut 8 before, and the fact that it spun off American Bitcoin, a big part of the reason why they did that was cost of capital. Because the cost of capital associated with Bitcoin is so much higher than the cost of capital associated with building out AI and data centers. This is why I do believe there are going to be other transactions similar to the spin out of American Bitcoin going forward. What does that mean? It means that when you're using project financing to build out a data center site, which is typically the way that these things work, there is no project financing available on the Bitcoin side. There just isn't. But there is plenty on the AI side. So I think that distinction is something that anybody who's actually trying to build out one of these companies knows all too well, but it's not something that you hear about on CNBC.
Although, I'd be curious, Mark, what you saw earlier, because you were also early in Bitcoin. Cost of capital in AI right now is relatively cheap. So, 5 years from now, I think it'll be extremely expensive. So I think in Bitcoin, also early days, right? I don't think you're really comparing apples to apples here, right? Right today. But about 7-8 years ago, I would say it was cheaper for Bitcoin than it is today, in relative to AI today.
Yeah, I'd agree with that.
Okay.
I would agree with that. At the same time, it's cheaper, but still not accessible to the same extent.
Yeah.
You know, with AI, where there are plenty of entities out there more than happy to engage with a company that is building out AI data centers. They have no problem valuing the cash flows, the future projected cash flows of those entities. Bitcoin, they don't even know how to do that.
That makes sense because the cash flows from the AI companies are in dollars, and dollars don't change by 80% in value in a year. And that's why like all the guys that were financing Bitcoin miners in 2021 blew up, because they were like, oh, I'm picks and shovels to the crypto, boom, but you weren't picks and shovels, you were illiquid spot Bitcoin exposure. And the miners lose all their value in 24 months. So I guess it makes sense from that perspective.
Weaving that together yet again, from financing, right, and the pivot from, I guess, talking about cost of capital of Bitcoin relative to AI, part of, I think, that consideration is largely driven by infrastructure needs, and I'm maybe being a little broad here, not just the chips themselves, but the power ultimately goes into feeding the entire AI revolution that we're part of today. So in that, do you think that the infrastructure layer is truly where kind of all of the value fundamentals should be derived from?
I think it's like a barbell. So the infrastructure will have lots of value associated with it and will look more like mid-teens return on equity type of a business, because that's just what infrastructure is. It doesn't have to be for AI. It could be internet service providers. It could be, bridges, whatever. But the other place that it would accrue is where you capture actual customers. And I think the hardest place to accrue value will be at we build models and then they're almost immediately open sourced and we don't control our own customer base. And so that's why I think if you're that business, that's a really scary spot to be, because it makes a lot more sense for that model to just get stuck inside some Facebook or Amazon or Twitter or whatever that has all the customers already. And those are the two places. I do think you'll see tremendous value accrual on both sides, but I think being in the middle would be like a very scary spot to be.
Yeah, I think one of the aspects of infrastructure that can get overlooked sometimes is the cost of building that infrastructure and the pace at which it's actually built. And I think that one of the things that's going to be a key differentiator going forward is how inexpensively and how quickly a platform is able to build out that infrastructure. When we're talking about data centers, it's particularly important because it's not like GPUs have an infinite shelf life. And so the faster that you can actually stand up a data center, and of course take into account cost, because that's going to impact your ultimate ROI, is going to be critically important. So while we're talking about a lot of these big ethereal things, a lot of this will just literally come down to picks and shovels.
I agree mostly that. I kind of disagree a little bit with Mark on, I don't think mostly will be picks and shovels. I actually think that layer of customer, I think when I speak to a lot of TradFi guys, I think a lot of the focus is usually on infrastructure. But I do think when I'm in the room with guys like David Johnston, and Morpheus, and these kind of early Bitcoiners and early hackers, and that world is completely different. And so I think if you are able to scale the decentralization or just scale the other side of it in terms of the applications, you're really capturing that data. And data is really what everybody wants. So for me, kind of these interesting maybe data marketplaces also become, when we're trading data. I mean, I love sci-fi, so there is a show out there I really recommend everybody to see. It's rated C, okay, but it's really amazing. It's Matt Damon was a producer. He worked with former Mossad CIA guys to develop this. Then they cut it off, by the way, from the TV because they said there was no viewers, whatever. But it was depicting the future, actually, we're going to live in. It's called Incorporated, if you want to look it up. And so that's really what it ends up being. There are these centralized entities, and there's some of them on one side, and then there's this decentralized world and trading of information and data sets. And I think that's just powerful. So I think I agree more with you on kind of both sides will be opportunities.
And then looking at both sides, right, the entire stack here, I'll reformulate the question based on your respective area of expertise and not put you in too hard of a spot. I'll start with Maja. Was there, as your framework for evaluating projects changes over time, especially with burgeoning information available to you and how quickly the pace of development has accelerated, was there, without naming any names, what was one opportunity, let's just say, you kind of passed on? And what was the driving factor behind you making that determination in the recent few months?
That I passed on and it's successful today?
No, I take it however which way you want.
I mean, I kicked, in not the last couple of months, it was the last couple of years. SBF was one of them. I kicked him out of the office. I was not liked by many of the crypto big names in TradFi until I was. So that's one for sure. I didn't understand why TradFi actually liked him. Celsius was the same thing. I had my beef with Alex back and forth on a number of open rooms, Blockify. A number of them. I did miss on a couple of, like Noose Research is really amazing, so that's great. Prime Intellect is really cool as well. Those are guys, and then I'm involved in Morpheus, so I didn't miss that one.
Cool. And for you, Conor, you're at foundational, right, on the financing layer. What I think you mentioned a little bit, but if you can explore the aspect of which particular use cases when companies come to you, or if this isn't even a metric you consider, that come to you and say, hey, look, this is what we'd like to finance, here's what we're doing. Is there a particular use case that often gives you the most pause when it comes to, well, we could facilitate that for you, but you sure you know what you're doing?
Chinese companies, mainly. Obviously, you can't do anything with China. It's actually very interesting, the geopolitical dynamics at play, because this never happened with crypto, but all of these countries are very sensitive to, they need to have their own AI presence. And in Europe, we do a lot of business in Europe because there's a lot of smaller neo clouds there that don't really have access to good financing. Like if you're a large company in the United States, you would. And there's a tremendous effort from the actual governments of these countries to have sovereign AI control. And going back to the point on data, having control over that. And I hadn't seen that before ever in crypto. No one's ever cared about that. So that's been very interesting. And there's also a dichotomy of what it costs to rent machines in these markets. So like in Dubai versus in the EU versus in Asia, there's big differences. The US is the cheapest by far because we have the most GPUs. But in these other markets, it's hard to get access to these machines. And so you might get enticed by a company that says they're, have all their machines in Singapore and they're going to be able to make a great rental rate and you'll, be very protected. But there's a fine line of is this Singapore in name only and really a Chinese company? And nobody wants to get on the bad side of the DOJ or NVIDIA or so. That's always been the challenge for us, is being able to split those hairs. And people always come to crypto when they have adverse selection. And that's always been our challenge. We weren't always financing GPUs. We tried to finance a lot of different RWAs. And most of the time, if something is an RWA in crypto, there's a reason that it didn't get financing from traditional markets. And fortunately, with GPUs, the traditional markets haven't quite caught up as fast as crypto has. And so you can navigate that a little bit easier. But certainly in crypto, you have adverse selection at every turn, because people are coming to crypto because they couldn't get a regular bank loan because something was wrong with the asset. Yeah.
And Mark, for yourself, the hammer embodiment here, turn the question on the side a little bit for you, which is when you're evaluating certain fundamentals in your analysis, which I guess, are there fundamentals that are more telling than others when you see something not quite there or there in spades, that'll often kind of indicate a company's success or failure?
Well, at the end of the day, it's all about cash flow. And one of the things...
Making money?
Cash flow. And one of the things that's fantastic about the AI space is that the hyperscalers come along with big contracts that typically extend 12 to 15 years. And from my perspective, having that kind of foundation, being able to have a contract in place to know that you have a foundation of cash flows that is not going to go away, gives a lot of the companies that are innovating the ability to go beyond what they would otherwise, because they just don't have that same variability throughout their entire organization. So I actually think that stability that is afforded by AI is likely to give rise to even more innovation, simply because these companies aren't going to have to worry about paying the bills the same way they would otherwise, and especially when your business is based on an asset that can depreciate by 80% in a few months.
Did you have something you wanted to add? Okay, hold it for now. Now, I mean, obviously, Greg covered the impetus to decentralize, right? And how existential of a challenge and really calling that is. To bring it back, focus into Akash, right there, the entire AI stack today, the tools that we all use, from ChatGPT to Claude to the very infrastructure that the silicon that these chips are made with, is all hyper-centralized. Which part of this stack gives you all the most pause, and which part do you think is we should focus on? I mean, for me, I think we should focus them in parallel. There's enough of us and enough brain power here to do that. But for you, which part of that stack are you most focused on when it comes to the models themselves, the information, the chips, the GPUs, et cetera?
I think first and foremost, GPUs. I can't help but tie all this into, I think Conor was right, geopolitics threads through all of this. I mean, I think it's been mentioned by Greg and a few others that the world is in a dire need for energy. And I think being in New York, where, AC blows all the time, I mean, not in this room, but AC blows all the time, you can't feel that. You can't feel that we're missing that part, right? You can't feel it in the West. The same way I didn't feel like I needed something better than a visa when I was living in Africa, right? The reason why I felt I needed Bitcoin and why I went into Bitcoin in 2010 is because I was living there. I realized how hard it was to receive and transfer money. And so if I lived here and had a credit card, I wouldn't have gotten that, which a lot of people didn't, right? And so I think when I look at this, I realize that equipment is cheap here, right? Innovation is here, right? Everything is almost here and 2-3 other places in the world, but that's about it, right? And the rest of the world gets exported ChatGPT, right? Because they can't develop their own. They haven't thought through it. They don't have, like, if you look at LATAM or Africa, some places in Asia, they don't have the electricity that's developed well enough, nor resources to access that in order to build what they need. And so they will, by default, accept what we're feeding them, which God knows, right, if their culture and language and everything else gets erased because we implemented ChatGPT. I mean, it's a very scary thought, which, again, to some people, they will just say, well, whatever, Darwinism, and the other people will say, no, we've got to fight for people to have their own local LLMs, to have their own GPTs or whatever, right? So I think it's very powerful. And then on the Bitcoin side, I think the reason, Mark, you also don't hear it, as you know, from traditional finance is because Bitcoin is very hard to digest, right? I mean, to a lot of regulators. One, we technically don't know who created it, right? That's an issue for a lot of TradFi. It has a volatility, as Conor talked about. So where in AI, right, it's very easy to ground something. It starts from Earth, right, or the sun, goes into GPUs, right, and then you create what you need to create. So it's very easy to compute and calculate, where these are, again, I say it's really apples to oranges that we're comparing. So I do think it is fascinating to think about those types of opportunities and where capital flows are going to go and where the opportunities might be in other parts of the world. Because if I look at LATAM, there's more decentralized opportunities in AI in LATAM than there are here, right? Because of the need. So that's some projects over there that we're looking at as well. But I would say GPUs is to start with, to answer your question.
I think that the easiest thing to have more competition on would be the chips, because NVIDIA's markup is, I want to say it's like 10x of what it costs to build those chips, something like that. You guys might know better, but it just seems like that's such a insane markup that's surely, you know, AMD or one of these guys will start to deliver chips that will bring those costs down. So I think that's probably the easiest one to have more decentralization on, just going from 1 to 2. I mean, maybe not. I know a lot of people think CUDA is like a huge moat and all of this, but it just seems like so much, you know, margin that it should be easy to decentralize there. The neocloud space is already kind of becoming very decentralized, and NVIDIA makes a grand effort to ensure that happens. They back a lot of neoclouds. They don't want AWS to be able to dictate terms to them, and so that one also feels pretty easy to keep, you know, have competition there. The hardest one to me is at the like OpenAI customer level, because once you have ChatGPT on your phone and you're used to it, you know, the switching costs are going to become increasingly high. You've already seen like tremendous power law examples in social media. I don't know why that would be any different with OpenAI. And that's also where you aggregate the most information that you can then really start to dictate how the world changes from there. So that one feels like the scariest and probably the most important to decentralize, and also probably the hardest to, because the average user does not care about their data and they're not going to go through the extra effort to run their own LLM. And so you're going to have pretty hardcore centralization. I guess the only way you would combat that is if, you know, XAI and the other social media platforms compete for it. But that one's the scariest to me.
To me, what's really interesting is maintaining flexibility with regard to the particular product, the particular vertical that Akash is going to be focusing on going forward. I mean, if we think back 3 years, yes, there were entities out there that were thinking about what AI could be, but nowhere near where we are now in terms of appreciating its potential. And I see companies out there that are building now, particularly in the energy space, not for a particular use case. It may be AI today, but they're building for a use case that might not have even been identified yet, with an understanding that there is going to be a shortage of energy, and that whatever this next phase in evolution is going to be is going to need a lot of it. So when I look at a marketplace concept, what I'm thinking about is how would this facilitate more efficiency, a better user experience for the next vertical that might not yet be on the platform. And to me, if you have the marketplace set up to deliver that kind of efficiency, the fact that you can plug in another vertical creates an awful lot of really interesting optionality, which again, coming back to the TradFi space, this is what the institutional investors love to hear more than anything else, optionality.
Well said. That was truly insightful. I mean, you spoke about ChatGPT at length, right? About, and Maya, you touched on how dangerous it would be if that was our chief export, right, to countries, and it starts to proliferate and dominate. And it already is taking root significantly in that way. Curious for you all here, the moment of truthfulness here, how much do you all rely on productivity tools like ChatGPT in your daily workflows? And what, two-part question, that's part one. Second part is, what kind of challenges or risks you see that posing to yourself, and just like the part of knowledge acquisition, asking the right questions, over-reliance, the like?
I use it a lot. I have to spend a lot less on lawyers now, for sure. You get kind of the final check from them, but a lot of the iteration, ChatGPT. I think a lot of like discovery, new category of collateral for us that you're looking at or something, is so helpful to use ChatGPT or whatever LLM you're using, to just spend like 4 or 5 prompts going back and forth to really articulate, better what you're even looking for in the first place, I think is super helpful. We also record all of our calls internally and externally, to the extent people are fine with it on video calls or whatever. And all of the information about how our protocol works and all of this, and we put all of that into our own LLM to try to, be able to make our business run better. Kind of mixed results so far on that, but my hope is that also, derives a lot of value for us in the future. But I mean, yeah, we use it all the time, and I think I'm not worried about, not being able to think intelligently from my use, because to me, I feel like I'm getting smarter. It's like 4 or 5 steps further along than I would have been without it, very quickly. So anytime I'm talking to someone new, I usually will try to spend a little bit of time beforehand kind of sharpening things up with ChatGPT. And it's very helpful.
I think it's a necessary evil. I don't use it all the time at all, but I do use it. I think Conor is right. It gives you 4 or 5 steps ahead. I do think it is scary. I may disagree on that a little bit. I am afraid of, 5 years from now not being able to think about an issue because I will just rely on that. That's a little bit sometimes scary. Am I going to be shaped by it? Also, it's self-reinforcing, and whatever you tell it never disagrees with you. So when you're strict with it, it reacts faster than anything else. When you kind of tell it it's stupid, it reacts even better. It's really weird. Lawyers, yes, I agree with you completely. You can run, for our 2 projects now, absolutely. I ran everything. I'm a lawyer myself, but I ran it through there and it was way faster. 10 times faster. You still have to go back and have a counsel, obviously. I use it, as I told you, for some of the medical stuff, which is really interesting. But I do have a fear of it, and I think it is stored somewhere. And I think we are absolutely naive if we think that this is information that's not going to be used against us. Absolutely naive. If you think that, raise a hand. I would love to meet you after. Wow, amazing room. Amazing. So everybody is aware of it. Look at this. This tells you something. We're all aware of the dangers, but yet we're all using it. This is insane. So you can pretty much sell us anything and we will use it, even if it goes against us. So I think that part of the education and part of also what Akash is doing with decentralized, right? Conversation with everybody else, I think is really important. What Eric is doing with Venice is important. I think what a lot of people are doing in decentralization is extremely important.
Yeah, I use it quite a bit simply to save time. If I'm looking across an entire industry vertical, I want to be able to look at the transcripts of all of these companies. I don't want to necessarily have to spend all the time to read them. So if I can have extracts that enable me to get to the 4 or 5 points that came out of a conference call and be able to have it quickly, then that's valuable. But it's a tool, it's not a substitute. One thing I've learned being in this business for more than a couple decades is It's not just about the ability to go out and amass information. It's the critical thinking that's applied to that information. It's the instincts. It's the pattern recognition from doing things for a long time. That overlay isn't going to get away. But if you can save time amassing that information so you can apply that overlay, so much the better.
Beautiful. Well said. Actually, it's not really me. I'm just a joke. Thank you so much for the panel here. I know I'm butting up against time quite heavily here. Are there any questions from the audience? Go ahead. In front. I'll hand you mine.
Awesome panel, everyone. And I think it was you that mentioned the chips question around the 10x, return or margin on H100s, B200s, etc. What have you all seen in terms of RISC-V chips, as well as new mathematics around how we think about binary systems? So some of the research I'm conducting involves like post-binary computing stacks. So no longer leveraging zeros or ones for mathematical computations, like different mathematical stacks are being developed. So question about specifically RISC-V. What have you seen in terms of RISC-V chips at all?
I personally haven't, so I don't know.
Me either. I don't know anything about that.
Okay, there's the
Okay,
answer.
well, can you tell us? Can you tell the crowd?
I will turn around and happily share. All right. Hi, everyone. So who here is familiar with RISC-V? 1, 2, 3, 4. Okay, so get on the panel. Kidding. So RISC-V simply is an open source specification for chips as well as software so that AI/open infrastructure stacks can run more efficiently. So think about it like AI native hardware. And
No,
AI
I've
native
heard of RISC-V, but I haven't had a project pitched to
Oh,
me.
okay.
So tell me a real use case.
Neuromorphic computing. So one
Okay.
particular use case is how do we emulate how the brain processes data and embedding that into the silicon itself and then building on top
Got
of
it.
That's really how you get to that target. Also, it's open source. So in other words, if we wanted to pool, let's say $1 billion to work on this chip together as a collective, we may or may not have the tool to do that.
So are you building it?
Yes.
Okay, pitch to us. Not now, but send us
Later,
a deck.
yeah.
Thank you.
I think we have. Perfect.
Thank you. Testing. It keeps going out. Okay. My question is for Mark. You were pretty consistent in your answers. Cash flow is king. Why is it that institutional capital invests in AI far more than they ever did in Bitcoin? Well, simply because they can invest by building the real estate and the hard equipment behind it. Hard assets, cash flow based, actually leasing out either the use of it or the property itself, right? Why? Ultimately because it's mandate permissible. Institutional capital can only invest within the limitations of its mandates, right? Counter to the typical VC narrative and perspective, which is inflated valuations based off of non-cash flow based future use, right? So how do you see the next steps, investing in intelligence for institutional capital? How can AI applications and use cases and infrastructure platforms alter themselves to be open to institutional capital investment?
That's a great question, and I think what it comes down to is taking those more amorphous or ethereal aspects of a business model and making them more concrete so that they can more easily translate to a cash flow model. And that really invites the introduction of new KPIs, the introduction of terminology that frankly a lot of the folks who are out there investing in these projects might not be familiar with, but that means there has to be a translator, someone who will actually bring the institutional investors up to speed on this. It's actually remarkable as somebody who has had a panoramic view of institutional investors for the last 15 years and was one for the 10 years before that. There is a remarkable reticence when it comes to acknowledging what you don't know. Nobody wants to acknowledge that they're ignorant with regard to an asset class or anything for that matter. You know, it's like all the institutional investors are omniscient, and that's their power, right? The reality is they don't know a lot of what you're talking about, but if you can guide them, if you can actually give them the underpinnings so they can better understand it and feel like they're omniscient, then you're going to attract potential new investors.
I think another thing, look at crypto projects early days, okay? In 2012, 13, we tried to pitch mining companies to hedge funds, to a lot of TradFi. Why? Because a lot of the people that started those companies didn't have any background in running businesses, in understanding how to pitch, how to speak to TradFi, right? And so I did a lot of that translation for 7 years. All I did was teach and go in front of family offices in TradFi, have them understand where blockchain or cryptography or Bitcoin is gonna go, right? And so that literally was part of my job at GE, was to teach executives on how to really incorporate this stack internally. And problem that I find with a lot of founders in crypto is they think they invented the world. Reality is you were born 10 years ago. And so you haven't really done things, and not you specifically, but that's a challenge. And a lot of times when I tell them, hey, get somebody senior to help you, get a good advisor, build a board, right? They go, well, I don't need that, right? I don't need the TradFi guys. You do need them because they're able to translate things that you actually can't, because you're thinking already 20 years ahead, and this guy who's 65, who's been running a very serious company, right? He's not there. He's running a P&L daily. He's running 130 people. You're nobody to him. And so a lot of the crypto guys, I had to sit down and say, ego out the door, right? What are you actually concretely building? What are the KPIs? How are you getting there? Who are you hiring to go there? What's the story? Don't give me some bullshit marketing and put it into CoinDesk. Actually build a report, right? Tell me what you don't know, right? And so that right there is your story. This is where you fundraise. And I tell that to founders and they go, well, no, look at my code. I built an amazing code. And I go, nobody really gives a shit about your code. Like, just give me a report and tell me why I should be thinking about the world differently. And so for that to happen, it requires an ego to go down. And so a lot of times, 99% of the time, I come across AI guys who think they invented the world and they're inventing the next world we're gonna live in. And so you're never gonna raise money that way. I don't care if you build the next whatever, you know, it just doesn't happen. And so when you meet the founders that are a bit more humble and they understand what they don't know and they present that to guys like Mark and the similar, then they go, oh shit, this kid is onto something. Let's help him out, right? So I think that, as basic as that really is the pitch.
All right. I think we are dramatically over time. Thank you so much.
Sorry, Amanda.
No, that was amazing. Sorry, Amanda, team. Thank you so much.
All right, give round of applause for the panelists. Thank you so much.